Sorry, I'm back. Sorry, I just had to make a quick call.
No problem. I've just opened up to everyone to start letting people in. People are busy logging in now.
How many are you expecting?
We had 65 or so registered.
Okay.
But one big group said they all logging in as one account. They're sitting in a boardroom. So probably expect about 50.
The guys sitting in the boardroom have to keep awake. Everybody else can just doze off.
Well, half of the people at least are on time.
Yes.
We'll wait for a few more people and then we'll get going.
I think generally accountants as a group will tend to be on time, given the fact that SARS keeps them at the risk of penalties to do things in time. So I guess this is a group that adheres to the time frame.
Well, I think, Stan, do you want to do the introduction in the meantime?
Yes, so welcome everybody. We're actually privileged today to have attendees from all over the country, from as far away as Hout Bay, around the West Coast, the East Coast, and it's very nice to see people joining from all over. It seems to me as if during COVID time, I don't know how everybody else feels, but to me during COVID, the pandemic, time seems to fly faster than normal, or maybe, I don't know, maybe it's me. When you get over the hill, the pace gets quicker. But welcome today, Edwin Selbst. He's no stranger to this group. And are you really independent? I'm intrigued to see what follows. Thank you for joining today. It's just a little bit of housekeeping. Do apologize for not sending the notes out earlier, and in future we will do that. We decided to hang back, but we should have sent it out yesterday, and I do apologize. From the point of view of breaks, Edwin will make certain breaks during the period, so probably almost on the hour or so. And if you, tomorrow or the next day, if you've made your payments, then you'll be receiving your certificates. If you haven't paid, please let us have it, and then we'll sort that out. And so welcome. Edwin, thank you for taking the time to do this presentation. And I hope everybody's got a cup of coffee, a cold drink, or whatever it is, make it a biscuits, and pay attention, because there are going to be some questions part of the way through. So Edwin, take it away.
Right, thanks Stan, thanks Danny, and good afternoon everyone. I'm sure everybody's familiar with the way in which Zoom works. So maybe just to confirm if everybody can hear me, if we can maybe just sort of have a show of hands or wave or something, if we can just see something, just to see if people can see what I'm doing. Great, super. I see 10 hands going up, super. Okay, so what we're going to be doing today is we're going to be looking at the Code of Ethics and focusing on the independence aspects. And as Stan mentioned, if it's okay with everybody, I'd like to propose a 5-minute leg stretch around about 3 o'clock, as close to 3 o'clock as possible, just depending on where we are in the slides, so that you can just, I don't know, grab a glass of water, quick walk around your office or your house, wherever you are, just to make sure that we can then focus on for the next hour. Then we'll take a 15-minute tea break, whatever you need to do then, catch up with calls, etc. And then right at the end, as Stan mentioned, there are some questions on a quiz, which are totally anonymous. So I don't know who's voting, if you're voting, but it would be nice to get some participation, just some practical application, you'll see, as to how independence is applied and the sort of types of questions that I'm consulted on, just to see whether or not we understand what we've been talking about this afternoon. So I think with that introduction, if we can just have by a show of hands, are we happy with those sort of time breaks, timelines to break then? Great. Okay, I see some hands going up and down. So that's great. If I can just ask you to please take your hands down, just to make sure that if there are any questions, please feel free to submit them. I'll try and watch the chat a bit, but if I miss something, Danny, if you can just let me know as well, if we can just watch that chat, because I'm looking at 2 different screens and may miss something. But please,
yeah, I think maybe people ask the questions in the question and answer section. That's easier to monitor.
Okay, thanks, Danny. So please use that Q&A and then we can address that. And then if there are any questions, if anybody's brave enough to go on air and have your voice heard and recorded by Danny, then you're welcome to please. I'm comfortable to take questions online, and we all learn from that. So let's then get started and let's have a look at what we've got on the agenda for today. We're going to just touch briefly on who writes the codes of ethics, who they are, where they come from, and what we need to focus on. We're going to be looking at the RBA code, some of the, interestingly, the fundamental principles have changed. We'll be looking at, just a reminder, I have addressed this in the past, but they say revision is always good. It gives me an opportunity to see who's been listening in the past. Just to confirm the effective dates of the code, and remember the code's changing continually. There's new changes that are actually being proposed and out for discussion at the moment. Some around in terms of the RBA, for those of you that are on the auditing framework, around the ADP program, that's where somebody is looking to train, once they've completed articles, to register and train as a and become a registered auditor. So further changes there that have been introduced to the code itself. And then we'll be looking at that enhanced conceptual framework, understanding independence, focusing in on independence in particular, and touching on confidentiality. And just so that you're paying attention, a quiz on even confidentiality at the end, just to see if those of you were concentrating. Then, in terms of professional skepticism, I always say that when it comes to professional skepticism, it's that ability to apply your mind in an objective manner so that other people can see, and there's evidence that you have not been prejudiced in any way, that you've been able to think out of the box, that you have the opportunity to consider different alternatives. And we'll be looking at that in the concept of the fundamental principles, and then focusing briefly on dealing with ethical challenges, and then some of those changes, and then, like I said, a short quiz at the end. Can I just ask at this stage if there's anybody who has anything that's particularly concerning them? Maybe you're facing an ethical dilemma at the moment, dealing with a potential independence problem, or maybe just a general question on the code itself. You know, if there's something that's bothering you, if you want to submit that in the chat, in the Q&A, I should say, if you could please post that so that we can just keep track of that, and I can make sure that I do answer that. Or alternatively, you're welcome to just raise your hand now if you want anything to be discussed, just to make sure I cover it today. So I'll just give you a couple of seconds if you need to type something or what you'd like to do in that regard. Okay, I can't see any hands going up or anything. Danny, I assume nothing in the chat. So I think let's then move on. And please, if I touch something that's bothering you, or you think of something, please do feel free to ask the question, and I'll answer to the best of my ability. Great. So then let's have a look now at the code. And to clarify, the Code of Ethics is an international document. It's applied in all countries that are members of the IAASB. And often what we find is that it's not only those it's not individual people that are members, it's actually accounting bodies that are members. So for example, in South Africa, members of IFAC are the South African Institute of Professional Accountants, as well as SAICA, South African Institute of Chartered Accountants, ACCA, and I'm stand under correction, but I think those are the biggest three organizations in South Africa that are IFAC members. Now, IFAC then imposes certain responsibilities. IFAC stands for the International Federation of Accountants, and they impose certain responsibilities on a member body, SAICA being one, and one of those is, for example, CPD, monitoring compliance. So it's not like SAICA have said that, well, you know, we need to monitor you and you need to get certain CPD, and that's what Danny and Stan do. They assist you in achieving that, but that's actually an international requirement from IFAC. IFAC is then broken down into different bodies, and what those bodies do is, one of them deals with the IAASB, the International Auditing and Assurance Standards Board, and that's the organization that does independent reviews, the standards on that, the entire auditing standards. They even have the standards on compilation engagements. So if you compile financial statements, if that's what you, the service that you offer, then you have a responsibility to carry out your requirements in terms of those standards. And interestingly, the IAASB are also responsible for the International Standard on Quality Control, ISQC1, that standard is actually in the presence of being replaced. The new standards have been issued. ISQM 1 and 2, the International Standard on Quality Management. For those of you that follow the RBA, then are registered auditors. So the RBA have issued and adopted those standards officially. Bernard Agallis his term was up about a year ago, and he was replaced by a lady by the name of Janita John, who the Minister of Finance has recently removed, actually asked the entire board of the RBA to resign, and that was because the board had appointed Mrs. John, and there were some questionable matters in terms of her association with, if I'm not mistaken, Hewlett, if I'm not mistaken. I think it was Hewlett that she was involved with. So, you know, that's what's happening in the local front on the IAASB in terms of our local regulator and what they're doing in quality control. But what we're going to be focusing on today is actually on the left of your screen, which is the IFAC Code of Ethics. And the IFAC Code of Ethics, the IAASB, sorry, the IFAC have a separate body, which is the IESBA, which is the organization that is responsible for issuing and setting ethical standards for professional accountants. And what's important is that while what comes out of the IAASB and the IRBA, the audit regulator, is only applicable to auditors in South Africa, the code is applicable to all professional accountants and professional accountants that are members of bodies that are members of IFAC. So SAICA being one of those member bodies, and therefore all its members have to comply with the code. And interestingly, the independence requirements, so there are additional independence requirements in terms of the code that are applicable to auditors and those performing an independent review, which we'll touch on quite briefly, and the code envisages additional requirements in terms of legislation. So from a South African perspective, we know that when it comes to auditors, auditors have to comply with Section 90 of the Companies Act, for example. And therefore, what we're going to be looking at is the general principles of the Code of Ethics, focusing on independence, but then also understanding what's then applicable to auditors or independent reviewers. Remember, an independent review, the difference between an audit and an independent review. An independent review, or let's start with an audit. An audit is an opinion giving reasonable assurance, so giving a level of comfort where one says that the information fairly presents based on certain suitable criteria to determine whether or not the underlying subject matter has been prepared in accordance with the requirements. To make that a bit more understandable, an audit says, well, has the financial statements been prepared in terms of the subject matter being the recognized framework, if it's for SMEs, for example, or if there's a non-entity specific basis of accounting, then the accounting policies that they've adopted. What a review does, a review looks at, well, have practitioners, have professional accountants carried out what they call a limited assurance. So as opposed to saying information fairly presents, it says, is there anything that has come to the attention of the reviewer that the information has not been prepared? So almost like a negative statement. And the extent of work carried out on those is significantly different. I'm not sure how many people, just maybe from a show of hands, worthwhile just to understand how many auditors do we have in the room? If we can just have from a show of hands. Okay, thank you. And then if I can understand, if you can put your hands down then, thank you. And how many people perform independent reviews? That may be you as auditors as well, but if you do independent reviews, if you could raise your hand again. Okay, thank you very much. And then one final question. I suppose then the rest of you, or maybe probably just to understand, how many of you are involved primarily in tax? Okay, and then I would imagine the rest of you, it's more sort of general accounting and consulting. And maybe one question, how many of you do compilations of financial statements? If you can raise your hands. Okay, so interesting. There we've got the biggest majority of people. Thanks very much for that. Great. So let's then understand, and what's important is no matter what service you provide, even if it's consulting, even if it's valuation services, bookkeeping services, whatever service you provide, if you're a member of SICA and SICA is a member of IFAC, you are then obliged to abide by the code of ethics. And depending on the type of services, if you're doing independent reviews and audit, then you have additional responsibilities. So let's then understand these responsibilities. I always like to just refresh your memory from previous courses I've run on ethics, that what is ethics? Ethics is a system or code of conduct based on your moral duties, so how you interact, what your beliefs are, how you interpret your obligations in a societal manner, to then indicate how one needs to behave in a professional environment. And that's what the code of ethics does. It codifies accepted professional behavior, because people have different views on different things. We've got a principle, for example, of integrity. So what does integrity mean? We'll discuss that in a bit more detail just now, but from the code's perspective, but everybody knows that you need to be honest. But honesty has got varying degrees, and you know, to some people it means, well, you can't, you know, that they apply it even very restrictively in their work environment, and to other people it's a much broader across the spectrum. And the question is, well, when things are gray, how does one then need to interpret it, and how does one need to behave? And that's why a code of ethics comes to try and standardize one's behavior. So in terms of the RBA code, so the code, don't worry if your slides look slightly different. I've just changed the fonts and that for what I'm showing, but the information's all the same. In terms of the code has been changed since 2018. This is something that's been around now for 3 years, and we're still learning and getting to grips with it. The purpose of the reason for the change was to improve the structure, to understand how different components of the fundamental principles apply, things like independence, confidentiality, etc. And then making sure that we have a better clarity of where there are responsibilities around safeguards, the opportunity to implement safeguards. For example, if something is not allowed, but because of a risk, but there is certain circumstances that it will be allowed, we'll have a look at some of those. Then under what circumstances is it allowed, and under what circumstances is something totally prohibited. We've spoken about the professional skepticism and professional judgment. And for those of you that are regulated by the RLBA, I think it's important that you realize that when it comes to professional judgment, every time you are applying your professional judgment, and I suppose this applies not only to auditors, you know, you should then keep a record of that, so that if you are ever challenged as to how you've applied your professional judgment and the matters that you considered, to demonstrate how you were skeptic of other possibilities, that should always be documented. And there's certain areas, for example, in NOCLAR, non-compliance with laws and regulation, a topic I've trained you on in the past, where that's a mandatory requirement for professional accountants in public practice. So those are the auditors and reviewers. But somebody that's just doing compilations, etc., it's encouraged, and I'm suggesting very well worth it. In terms of the revisions pertaining to inducements, we have covered that, but I think it does affect one's independence, and therefore we'll be touching on that again. And then we'll be looking at some of the paragraphs from a South African perspective as to which ones have changed. So if one looks at the code, and remember the RBA code is the same as the IFAC code with further enhancements, additional interesting, the reason the RBA had changed certain things is because what they saw is that there was a need from a South African perspective, and particularly South African, the environment in which we operate, certain matters in the application guidance were elevated to actually requirements from a South African perspective. So it's important that for those of you that are auditors, that you focus on the code of ethics, the code of professional conduct, as it's called, issued by the RBA, but fundamentally the same, just with some further enhancements. So just for clarity, part 1 deals with the fundamental principles. Part 2 deals with professional accountants in business. Part 3, registered auditors and registered reviewers. So in South Africa, if you, for example, are a reviewer, you're not a RBA registered person, but you, as a SICA member, you'd also be entitled to do review engagements. Part 3 covers you. Even though it says here auditors, we should actually say auditors/reviewers, because the definition, while the code speaks about auditors, in the definitions it defines an auditor as anybody issuing a audit or a review opinion. So that's why part 3 applies to both. And then this is the area, parts 4A and B at the bottom, that apply to those of you doing assurance work. So that's also the independent reviewers and auditors, and anybody doing sort of attorney trust audits, what they call additional assurance engagements. That's also covered in part 4. So that's something you need to apply when you carry out such work. So the audit of an attorney trust audit would be covered in terms of part 4B, whereas part 4A deals with your responsibilities in terms of an audit or review. Great. I don't know if there's any questions. So Then let's just understand the structure then of the code. In terms of the code, so we've got the RBA code or the RFAC code, and that's broken down into two main categories. There's requirements when we get to the detail, something which is often introduced with the word shall. In other words, this is something that a professional accountant has to comply with. And then to understand how one needs to apply the principle, well, that's where we have a matter of guidance, and that's where we see the code explaining how the fundamental principles are applied, specific scenarios, looking at it from small firms, etc. So we're going to be touching on these requirements and the application guidance as part of today. And then in terms of the effective dates, so parts 4A and 4B have been in place together with parts 1 and 3, which means the fundamental principles and the areas that apply to auditors, so professional accountants in public practice. So those are your auditors or reviewers. That is all effective for periods beginning on or after 15 June. So we're well into all of parts 1, 3, 4A, and 4B. And then some of these factors, those long association provisions, in limited circumstances, additional enhancements from the code's perspective as to who can carry out what tasks, what roles, and how long you need to cool off, because that does affect your independence. We'll touch on those again a bit later. So in terms of the conceptual framework, so the conceptual framework is actually made up of the following categories. Professional competence and due care, making sure that when we as accountants, professional people, carry out our responsibilities, well, do we do that with the care that would be expected of a professional, with an understanding of the technical standards that are out there, the legislation. You know, I had a situation where somebody contacted me and they said that, you know, they're going to be performing a audit of a non-profit organization, and they wanted to know if a non-profit organization is the same as a non-profit company in terms of the Companies Act. And my response was, well, actually, non-profit company stems from the Companies Act, and it's a type of company and has certain differences from a private company, for example, no profit motive and other matters, such as a aspect that it doesn't generally have members, so normally shareholders, and its memorandum of incorporation should state that the funds or any excess of income over expenses cannot be distributed to the founders of the entity, whereas a non-profit organization is something which is a prerequisite for tax exemption, and that is quite different. And obviously, you know, if one's operating in this space, well, one needs to have that necessary knowledge. When it comes to integrity, I think we all understand the basic principle about that. We'll be discussing these in a bit more detail. Objectivity, confidentiality and professional behaviour. And then the one we're going to be focusing on today is independence. But before we get to independence, let's just have a look at those fundamental principles a bit more. So we have a responsibility to be straightforward and honest in all your professional dealings. And the code says that a person shall not knowingly be associated with reports, returns, communications, or other information where the professional accountant believes that that information contains a false or materially misleading statement, or information is being provided recklessly, or omits or obscures required information whereby the omission is of such a consequence that it would be misleading. And it's important that we focus on this, because sometimes when we are looking to try and assist a client, we unknowingly are in breach of this information, or of this requirement. An example that comes to mind is, we know, for those of you that are auditors, there's a requirement around the disclosure, and for those of you that are compilers of financial statements, the majority of you, that there's a requirement for an entity that's subject to a statutory audit, and as communicated by SIP-C in November 2019, that responsibility extends to an entity that is subject to a voluntary audit to disclose directors' emoluments. Now, SIP-C, for those of you, I'm not sure if any of you have had, or your clients have had, a request for information as to why directors' emoluments aren't disclosed in the level of detail that's required. So gone are the days when you could disclose a lump sum directors' emoluments in terms of Section 30 of the Companies Act. What we see now is that the names of the individuals, the users of the financial statements, how much they've earned, and what their benefits were, what was paid for pensions, other benefits, that all needs to be reflected in a note to the financial statements. Now, if one's leaving that information out, or one's disclosing it as a lump sum, well, the omission there is potentially misleading, because it doesn't give a person sufficient understanding what the tax consequences are. SARS are looking at this extensively. And we've even had situation, for those of you that prepare financial statements or audit or review financial statements in a group scenario. So if you've got company A, company B, or let's say holding company and subsidiary, H&S, and you've got directors, well, in terms of being honest, when you prepare financial statements, obviously, if it's been disclosed to you, the full details of what's required need to be disclosed in the financial statements in terms of the Companies Act around directors' emoluments, if it's an audit. Don't know if there's, and I'm saying if you leave that out, that potentially obscures the information, because it's unclear who's actually received what. And there, I do believe, would be a breach of integrity. Any questions or comments on that? Okay. So then, when it comes to objectivity, objectivity is the requirement that a person is not allowed to put oneself in any position whereby their professional business decisions could be swayed in a particular way, and therefore a person is not allowed to undertake any professional activity that could impair their objectivity, so that somebody else looking at the matter would think that there is a concern. And objectivity and independence are quite closely related. For example, you know, if one is doing, if one is carrying out a review of financial statements, and one also does tax computations and consults to the entity on that, well, there's a risk that your objectivity, when you look at those tax computations, may be impaired, because it's yourself or somebody at your organization that has performed that. So what then does one need to do, and when is it prohibited? Just to respond to that right now, it would be prohibited if it's a public interest entity. And if you're thinking, oh, well, none of us do listed entities, well, ISQC1, the International Standard on Quality Control, says that based on your risk profile, you also need to define for your own firm in your quality control manual what is a public interest entity. So you may have a huge client in your practice where you do certain work, and that client, by its nature, based on its fee base, etc., could have a threat of objectivity to your practice. And that's why it's imperative that we look at things and then understand what the code requires and see whether or not we are in breach of that. Because if independence is breached, well, then the entire basis for the service that has been offered is brought into question, whether or not anything's been compromised. But that's how the regulator views this. And I think we need to just make sure that we take a very careful consideration of this, because, you know, it's interesting. I remember a scenario where a practitioner was appointed as a mediator, a chartered accountant. He was appointed as a mediator and was actually friendly with one of the candidates, one of the two parties for which mediation was being carried out. And, you know, no matter what you say, people looking at that will say, well, clearly this person would be favoring their friend. In terms of the professional competence and due care, so when it comes to professional competence and due care, one needs to make sure that one complies with the principle and attains and maintains one's professional knowledge. In terms of the example of legislation, you know, they say that in law, ignorance of the law is no excuse. And the same applies in maintaining your professional competence. You know, if you're just doing a review, if you're doing a tax computation for a client and you aren't aware with the latest changes, when the latest budget speech was announced, what those changes were and when they are effective. I know that I think it's Jackie Orenso will be taking you through that, not my area of expertise, but then you are failing in your professional competence and due care. And one needs to make sure that one carries out one's responsibilities in terms of all of these fundamental principles. When it comes to confidentiality, so a professional accountant needs to make sure that they are alert and guarding against inadvertent disclosure of confidential information, be that in a social environment and particularly to close business associates or an immediate family member. One needs to make sure that confidentiality is maintained within the firm. So that means if you are the only partner in your practice that does audits or does tax work, well, you shouldn't be discussing information that's relating to those engagements with other parties. You know, if you're looking for consultations and opinions, well, there's certain requirements and things like that need to be documented from a ISQC1 perspective, where you consulting and resolving potential differences of opinion. But I think what's important is that this confidentiality within the firm is critical. One of the there were quite a few chartered accountants and audit firms that had working papers compromised with board exams in the past, part 1 or part 2. So very important, and we need to make sure that we abide by that. And then one needs to also be very sensitive to disclosing confidential information to prospective clients, somebody that you're looking to sign on. And then one's not allowed to disclose confidential information acquired as a result of a professional business relationship outside the firm without proper and specific authority, unless there's a legal professional duty to do so. That could be, for example, in terms of subpoenas or matters around regulator inspections like the RBA, etc. They have authority. And then one needs to make sure that one doesn't use information, confidential information acquired for one's own professional business purposes to gain some sort of an advantage. Nor is one allowed to disclose information that landed up on one's desk, which they weren't entitled to. And very importantly, one then needs to make sure that one takes reasonable steps to ensure that personal information within one's scope, within one's what one has received, is then guarded and not disclosed to any parties that shouldn't be entitled to that. When it comes to professional behavior, well, one is required to comply with the principle of professional behavior. One needs to make sure that one is complies with the relevant laws and regulations, because, and I think our own profession has gone through a hammering in the past, and I'm talking about not only registered auditors, but chartered accountants. And, you know, this then brings the profession into a situation of its reputation and integrity being challenged. And it's also important to ensure that if one is, for example, disclosing information that's not allowed to be disclosed, well, that's also putting the profession in a very bad light, giving the profession a bad name, yet alone to carry out or breach matters of integrity, etc. And we know that there are many, unfortunately, prominent chartered accountants that are being investigated as we speak, SAICA and the RBA carrying out those investigations. When it comes then to the international standards on independence, so as I was saying before, Part 4A deals with audit and reviews, and Part 4B deals with assurance engagements other than audit or reviews. So those sort of attorney trusts, royalty agreements, where you're signing off a opinion in terms of international standard on assurance engagements ISAE 3000. So that's and actually also state agents. If you do any of those under the Sectional Title Management Schemes Act, those all need to be carried out in terms of ISAE 3000. So let's then have a look at, when it comes to independence, you know, what is the world focused on independence? Why has this been highlighted so much? And if we look at the code and the definitions in the code, so there are two types of independence. There's independence of mind and that of appearance. And when the professional accountant is exercising professional skepticism, one needs to make sure and evaluate the decisions that one's taking through the lens, through the binoculars, and that's why we've got this diagram here of the definition of independence. And independence of mind is that state of mind that permits the expression of a conclusion without being affected by influences that compromise professional judgments, thereby allowing an individual to act with integrity and exercise objectivity and professional skepticism. And I think, you know, one thing I like about the enhanced, the new code is we see how the different principles interrelate in terms of applying professional behavior. And while it's sometimes easier to show, based on the extent of work that one's carried out, that one has been independent, when it comes to independence in appearance, that is a lot more difficult to prove, because there what we're looking at is we need to look at the avoidance of facts and circumstances that are so significant that a reasonable and informed third party would likely conclude that the accountant or the firm or anybody part of the assurance team, that they have, their independence has been compromised. So worded expressed, just so you can see that visually, is we're saying that if you are applying and looking to satisfy independence and want to be independent from the perspective of other people, well, we need to look at it from an independence of mind perspective, and that would deal with the way in which you have exercised and carried out your professional judgment, and there would be working papers to evidence that. But what's important is that one needs to make sure that one is applying professional skepticism at the appropriate level. So we've spoken a lot about professional skepticism, and let's then understand, what do we mean by professional skepticism? Because it's interesting, professional skepticism is the area in which, how can I word it, the most significant changes to the code have taken place. And the way it is defined is as an attitude which is applied in making professional judgments, providing the basis for one's actions, and the documentation that is in place that evidences how one had applied one's mind to arrive at the proposed judgments and actions. So that's quite a mouthful. Let's then just understand, what sort of an attitude then do we need to be concerned about with professional skepticism? So professional skepticism is defined as the ability to question information, being alert for facts or circumstances that may indicate that the information that you've been given isn't correct, could be contain errors, could be fraudulent, and therefore it's that ability to apply a critical assessment and objective evaluation of the information. You know, an example that comes to mind is, you know, if you ask, let's say you, yeah, I'll give you an example that actually happened to me. I was conducting a service for a particular client. One of the services I offer is I carry out external quality control reviews, which is a review prior to sign off on a public interest entity or a high-risk client to an entity. And the other service we do is we look at file monitoring reviews in terms of any professional accountant that performs audit or reviews should have a system whereby they monitor on a cyclical basis the quality of their work. And we had a situation where the financial statements of an entity had reflected a significant growth in revenue. It was an estate agent, and the sole shareholder and director of this entity reflected a significant decrease in income. And when one looked at the financial statements, it just sort of reeked of potential misstatement and tax evasion. And you know, there was a loan certificate which had included their movements in the loans, and quite very apparent from the loan was commissions going straight to the person's loan account to offset drawings. And you know, it just didn't make sense looking at the financial statements just from an outsider applying professional skepticism. But the auditor that had actually carried that out accepted it and signed the accounts off without even looking at the detail of the loan accounts. So when it comes to the need then to apply the code and professional skepticism, so one needs to then take the fundamental principles and ensure that one is applying that in a way in which the code supports the exercise of professional skepticism in the context of any engagement that you're carrying out. So, as we said, there's enhanced requirements for audits and reviews, but the fundamental principles of independence and the definitions of independence in appearance and independence of mind apply to all the aspects of the services that a professional accountant would be offering. So a chartered accountant, a manager, and interestingly, from depending on your contracts, it's often worthwhile including in your employment contracts. I've seen whereby if you've got professional staff, if they're under articles, they're obliged to comply with SAICA's code of conduct. If they're involved in an aspect of tax work or something, maybe not. But we recommend that all your professional staff or staff providing information and consulting to a client should comply with the codes that you are required to apply. That's a requirement for all your articled staff, if you do have that, if that's the area in which you operate. In terms of performing engagements, so one needs to make sure that those services that you offer, that you then apply these concepts. And therefore, as we've been discussing, when it comes to integrity, so one needs to be straightforward and honest and raise concerns when a client has taken a particular position. For example, their tax treatment is clearly contrary to the Act. Well, then one needs to take umbrage with that. One needs to challenge information, because how can one say that one's honest if a person gives one information and one looks at it and it doesn't seem remotely credible, or one looks at it and it's inconsistent, with your understanding of the way in which the business is being conducted. Another example is an entity that has a client was asking me, is there a breach of the code in terms of applying professional skepticism if they've been given a set of a trial balance from which financial statements need to be drawn up, and that's the role in which they play. And the information that they've been given, this was a manufacturing entity with a significant labor force, and there's no provision for leave pay. Is that not something that one should look for in a labor-intensive organization when preparing accounts in terms of IFRS or IFRS for SMEs, as an example? So then one needs to then look at these things and then make sure that, sorry, just give me one sec. One needs to then make sure that one then applies one's mind appropriately. So when it comes to objectivity, so we need to make sure that when it comes to looking at different scenarios, different cases, such as family relationships, I'm aware of a situation where a person felt that they wouldn't be objective because they had a situation whereby they had personally been affected by a scenario, and therefore at this client it was disclosed that something was going on, and the person felt that in terms of the senior role that they were going to be playing on that engagement, that their objectivity would be impaired, because this is something that they felt very strongly about, and the client had a different responsibility in that regard, a different feeling. So I think that brings us to 3 o'clock, and I'd like to then propose that we have a quick break now, literally a 5-minute leg stretch. So please, if you can just watch your time, and we'll be continuing in 5 minutes' time. Okay, thank you. I'll take the question after the break. I've just noticed that. Thanks. welcome back, everyone. Apologies for the slight overrun. I just had a call that came through, just something needed to attend to. So we've got some comments that I'd just like to address. The one saying that, and I'll just read it to you, is that it bothers me that some vocation membership bodies consider themselves to be the directors, custodians, and interpreters and regulators of ethics. I think a far better word is conduct that was previously used and can be vocation specific. For me, ethics is a personal sense of right and wrong, good and evil, moral and immoral, fair and unfair, and is forged by personal development and philosophy, family values, culture, religion, etc. In short, it's one's conscience. So I think you raise a very interesting discussion, because the whole purpose of a code of ethics is to take different philosophies, to take the debate away from moral and immoral, to take one's own personal preferences and understanding or perceptions of what's fair and unfair, and to codify it in a and also to remove different versions of different interpretations that culture or religion may have, and to then codify that in an aspect that then deals with, in the professional environment, this is how you need to behave. And I'll give you an example. Let's say one's dealing with theft, if one's dealing with integrity. I mean, I don't think there's, I'm going to be a bit naughty here. Just from a show of hands, is there anybody that believes that stealing is allowed? Anybody? Okay. If you can just raise your hands if you believe stealing is allowed. Okay, so then I'm going to ask the question another way. Does everybody agree that stealing is not allowed? If you agree with that statement, please raise your hands. If you're not listening, now's the time to listen. I've only got 9 people out of 41 saying that stealing is not allowed, and nobody said it's allowed. So just keep your hands up. Okay, at least we've got half of you listening now, almost. But I think, so everybody says that it's stealing. So, sorry, the first question was, is stealing allowed? Nobody said it's allowed. Everybody's, we had quite a significant number of you voting and saying stealing is not allowed. So what would you say to the following scenario? You're working at the office, assume you're not the owner of the office, of the business, and you go in and it's the beginning of the year, January has just started, and you are looking, just come back from holiday. Obviously this year wouldn't have been a good example with lockdown, but in those days when we could go on holiday and travel freely, and you know, the budget is tight, so instead of going to your local stationery shop, you say, well, look, you know, things are a bit tight, let's rather take a pen or a pencil or something And, give that to my daughter. Give that to your child. Give that to your niece, nephew. Somebody in the family could use that. Now, if I can ask you all to lower your hands if they have been still raised, if there's a few that are still raised, and ask, who would say that that's right? Who would say that that's stealing? But let me ask you a separate question. Thank you to those of you that voted. Let me ask you a separate question. What if instead of giving it to your daughter or to your niece, you took that pen home and wrote your shopping list, your to-do list, signed all the things that you needed to at home, who believes that's wrong? Interesting, we've got half the number of people that said giving it to your, compared to giving your daughter, says if you're using it at home. But I mean, let's just think of it from a perspective of the organization. What's that pen been given to you for? It's been given to you to carry out your work responsibilities. What's that got to do with your shopping list? If you use it or if your daughter uses it. So, this is an example of understanding how our different morals, how our different religious or cultural influences will determine how we will behave. And therefore the code is looking to say, irrespective of that, this is what conduct is. This is what integrity is. We've taken a very simple example. Obviously, it gets quite complicated in practice. Another comment on the chat is that somebody read an interesting article some months ago where the researcher claimed that in the last 10 years, there'd been a marked shift from an individual's ethics, the old-fashioned meaning, being absolute to being relative, and that this was not restricted to South Africa, but was particularly noticeable in this country. My comment on that is that we would look at our leaders to determine what's acceptable behavior. And without mentioning names, I think we all know that we have had leaders that, when it came to their moral and ethical behavior, has been extremely questionable. And while that says a lot about those leaders, it also sets the tone and a new basis of how people evaluate what's acceptable behavior. And that's from a moral and social perspective. And we then need to make sure that when it comes to a code of ethics and audit regulators and International Federation of Accountants, etc., South African Institute of Chartered Accountants have certain codes and therefore expect their members to abide by them. Yes, unfortunately, some of them haven't, and that's why we're facing the situation. The profession is facing its situation, and the wheels are turning in that regard. For some of us, not fast enough, but we need to understand that when it comes to ethics, we need to divorce ethics from moral and conscious behavior, because then we will be here for an endless debate, because what you consider to be honest or theft or not theft, somebody else may differ. And that's why the whole principle of the code of ethics say, well, this you agree, then that's what those requirements are. You shall do this. You don't want to, no one's going to force you. But then you can't put yourself out to be a member of that body. So I hope that's answered your question, your comments adequately. Thanks very much. Okay, if there are any follow-up questions, please feel free to submit them. Okay, so when it comes to competence and due care, you know, when one's looking at, for example, an audit of financial statements, one needs to make sure that one applies the principles individually and collectively, so that one is then able to exercise and apply one's knowledge to a particular client's industry. Let's speak about attorney trusts, for example. High risk, huge fraud taking place, and scary, the Fidelity Fund, that's the body to which pays out clients of attorneys who have had their funds stolen, saying that they see no correlation between the claims that they receive and those which are audited versus those which are not. In other words, they would think that the number of claims on attorney trust, or I should say, the number of claims from attorneys which have had their trust accounts audited should be less than those which have not been audited. And they're saying they see no difference, which is a scary reflection on the quality of an audit in an attorney trust. There's also a need to make sure that when it comes to competence and due care, well, if one's going to be carrying out a procedure on an audit, and I'll just give this as an example, and then we'll get off the auditing topics. You know, let's say one identifies that there's a risk that the financial statements or that revenue is understated, the client's looking to pay less tax, and therefore that's one of the ways that they can pay less tax, and therefore they reduce the amount of revenue, and therefore the income is significantly lower. Apologies for that, just a door closing in the background. And then therefore one needs to then just make sure that you know, when one does procedures, it doesn't help designing a procedure in the wrong direction. And yet this is what the regulator finds, that, you know, based on the risk, one needs to have a procedure that's responsive to that. And if one designs a procedure that's inappropriate, for example, one tests in the wrong direction, well, how are you going to ever pick up the understatement of revenue, for example? So hope that makes sense. Don't know if there's any questions, anything further. Okay, so overall then, when it comes to professional skepticism, what we're saying is then skepticism is the process of applying reason and critical thinking to determine the validity of information. Yeah, we need to have that questioning mind in check. You know, it's easy to be a cynic, to criticize everything, but the difference between a cynic and a skeptic is a skeptic evaluates information, verifies, and then concludes, versus a cynic just being distrustful and inflexible and just dismissing all information or explanations. Big challenge on professional skepticism is time pressure. The lack of ability to apply one's mind insufficient detail is a huge deterrent in the application of professional skepticism, and therefore we need to be alert to this, particularly under deadlines, because that's when our independence can be compromised because we are not looking at all the facts objectively. And then, obviously, ignorance, if you aren't up to date, well, how can you consider different possibilities, different options? An example that comes to mind, if you're preparing a set of financial statements and you're not aware of, say, the difference between one framework and another, say IFRS versus IFRS for SMEs, and your client is using one of them, well, how then are you then able to question what they've done and question the disclosures included then if you don't have the necessary knowledge? The same would be applicable to tax treatments, to valuations. If you don't know what the alternatives are, what the law says, well, how can you challenge? So, when it comes to professional skepticism, one needs to have the ability to look at matters from a perspective of, well, if these are the assumptions, what if they were reversed? Look at things from a different perspective. Look at the possibility of contradictory viewpoints. Understand what assumptions or information supports the conclusions and what could actually change the result or conclusion without empathizing or having a predetermined anticipated result. A strange example that comes to mind is somebody, this could be in an audit or in a compilation, a preparer of financial statements in terms of the Companies Act compiler has to make sure that they prepare it and that they are not providing any misleading information. Well, the preparer of financial statements also needs to apply the Code of Professional Conduct and also needs to apply professional skepticism. And therefore, let's say one looks at a situation where they're preparing the financial statements, they have a look at it, and they can't say, oh, well, this is what the client's given me, this is what I'm preparing. A preparer or compiler of financial statements needs to look and make sure that makes sense. And you look at it and you say, well, actually, I know this entity, it's a property company. I know it's in a state of disrepair. How does it make sense that repairs and maintenance has gone up 50, 60, 70, 300%, whatever that number is? Or the other way around, we know that it's well maintained, why there are no repairs and maintenance. So, one needs to look at that information that's being presented, that trial balance, that set of financial statements, and question it. I'll never forget when I was a clerk, I'd spent months on a particular significant engagement. Sorry, I think I'm exaggerating slightly. I think it was about 3 or 4 weeks. It was an entity involved in the manufacture of certain plastic products. Spent a good week on inventory, and the partner I was working for looked at the set of financial statements and he said, you haven't done enough work on inventory. And I started explaining everything that I'd done and why the amount was right. And the person said, yes, but the GP percentage doesn't make sense. They've got too much stock at year end. And, that's just an application of one's knowledge and professional understanding of the industry and the client. And the partner was proved right, and the work I'd done was insufficient. So, you know, when it comes to then professional competence and due care, so a registered auditor is not allowed to undertake an engagement where competence is lacking. Well, that sounds very obvious, but your independence is going to be impaired, because unless you are able to get the necessary skills to carry out the engagement satisfactorily. We've spoken about different industries. You know, imagine undertaking a tax computation of a mine without understanding the specific legislation and the types of transactions that are applicable to them. I don't know if there's any questions. Okay, I can't see anything in the Q&A, so thank you. So let's then have a look now at other aspects from an integrity perspective. You know, a person is not allowed to be associated with parties that are utilizing their designation. This is, for example, where a firm, for example, may have a specific deadlines or capacity constraints, and therefore, you know, there have been situations where, would you believe it, that auditors have given their practice number to another party, and this person was signing off the audit reports. And when it comes to a registered auditor, well, one needs to make sure that there are adequate guidelines. You know, sometimes, particularly now, for those of you that are auditors that have rotation requirements, we need to make sure that they carry out their work independently in compliance with the Act, and sometimes an RA may be associated with one or more firms, so that they're able to rotate work amongst the same firm without the firm losing that client. That's allowed, but one needs to make sure that that's done in a way in which the independence is maintained. In other words, if the one practitioner is totally involved in the discussions with the client, well, how much independence has the registered auditor got that's supposedly signing off the accounts? Because we'd say, well, really, they aren't independent. Yeah, I don't think I'm going to discuss these just in the interest of time. This is something I have gone on in the past, and you can just read these slides. I don't think it's necessary. This one I would like to clarify, because this is an enhancement that does directly relate to independence and integrity, and that is that, you know, if you are taking on a new client, there's a requirement that you communicate with the predecessor accountant to determine whether or not there is any basis or reason why you should not accept this appointment. And it's interesting that the South African requirements now state that if a client refuses or fails to give permission remember, we've got that confidentiality principle that you can't communicate with a predecessor accountant, and that predecessor accountant can't, how can I word it, cannot disclose any information without the permission of the client. And therefore, if the predecessor accountant fails to give, if the proposed client fails to give the predecessor accountant permission, well, that fails, and the RBA is saying unless the predecessor, the proposed accountant understands the basis for this, they are then expected to refuse the acceptance of that engagement, because there's something that the client is looking to hide. There's something that would then that is affecting the ability and of the outgoing accountant to disclose that information. It goes, the only time they could accept the engagement is where there were exceptional circumstances. But once again, this is now where you're applying your professional judgment. I suppose exceptional circumstances may be the previous accountant unfortunately passed away. So there's no way you can get that information. It was a one-man practice. You know, that's something I think, talking off the top of my head, would be a situation. But I don't think actually that's quite covered, because it says the proposed client refuses or fails. I suppose they failed to because they, maybe the, no, sorry, apologies. No, I can't think of an example of that. And then obviously if information is gained from confidential circumstance, it needs to be treated as such, and the principle of confidentiality maintained. Contingent fees, from a South African perspective, a registered auditor cannot charge a contingent fee. For those of you doing tax work, for a tax return, if you're preparing it, for the amendment of a tax return. And the reason is because that impairs one's independence. If you're looking to justify a certain tax treatment, well, that's an administrative aspect, an administrative task, and therefore you should have a fixed fee to do that. If you're saying that if you're going to prepare the tax return and therefore, or amend the tax return because you believe you can save the person money, that would be the basis, and often a contingent fee would be a percentage of the tax saving. Well, the code says that is a self-interest threat. That is an impairment of one's independence. Any safeguard that you implement will be ineffective. And on that basis, contingent fees for the preparation of tax returns or amendments to tax returns is prohibited in South Africa. Now, we can say, well, who's the RBA to say that this is something which should be prohibited? Aren't they restricting the income of auditors in this regard? And I would imagine from their reviews and inspections and complaints, this is an area in which they see that objectivity has impaired, and in order to protect the public, this is the rule that they've set. And by the way, anything in these slides that has an R with an SA afterwards is a South African specific amendment, additional requirement, enhancement to the code. Okay. Sorry, I'm just checking at the checking the time. You know, when it comes to other enhancements in South Africa, so registered auditors precluded from holding client assets derived from illegal activities. Obviously, that would be, one would think that, well, what do we need to say? Have that included here for, well, you know, with what's been going on with the corruption in South Africa, you know, there are some audit practices that actually have money market investments where they pool funds. Now, if those funds have actually are a result of money laundering, well, that's an illegal activity. And I think if we look at what's happened in South Africa, this is an area which is of serious concern. If one does hold client monies, well, there's specific requirements that need to take place for these sort of money market accounts. You can read that. I don't think there's anything rocket science included therein. I'm just going to skip these. This is also matters that, you know, just in terms of if one's holding assets for a client overall, be that money or any type of assets, one needs to just make sure that they're adequately protected, they're adequately separated, and the risk there is that one's independence may be impaired, as well as objectivity, and very importantly, if you're a registered auditor, if you're holding funds for a long period of time, well, it needs to be administered by somebody that is not the RA. The RA should be requested to open request the client to open a separate bank account where the RA is given power of attorney, but that should not be somebody where one's doing audit or assurance. It could be somebody else in a practice or something, but needs to be quite distinct. And obviously, just from a legality perspective, worthwhile having these reduced to an LOE, letter of engagement, so that a person can understand the risks involved, the client. In terms of custody of client assets, the RA is precluded, is not allowed to accept custody of client assets unless the threat of independence can be eliminated or reduced to an acceptable level. And that is for a firm or network that cannot assume management responsibility for those funds, and other assurance cannot relate to the subject matter of the assurance. So I don't know if they're the ones that get the royalty, and it's set, you know, that the funds are paid to the auditors, and they give a letter, an audit that the royalty calculation complies with the contract. I would think that's a good example of such a scenario. Then the auditor would be precluded from keeping those funds, because that's a direct challenge on their independence. Don't know if there's any questions on these code enhancements. Okay, so can't see anything in the Q&A. So let's then move forward. So let's now understand, how do we then deal with ethical challenges and apply professional judgment to these matters? So if we look at the framework with dealing with ethical challenges, we need to exercise professional judgment. We're familiar with that in terms of what we've been discussing so far. We need to remain alert for new information and changes in facts and circumstances. That's where professional skepticism comes in. And then we need to use this reasonable and informed third-party test, a step-back approach to look at that information so that we can apply our professional skepticism to see that we have not missed anything. What's important then is how then, if we've got a potential challenge, an ethical dilemma, how then do we deal with that? And the code defines the process. And what the code says is one needs to identify the threats, understand the information, and identify which of the fundamental principles are being challenged. Evaluate those threats. What's causing a potential breach of the code? And then understand how one can address those threats. If, for example, it's an independence, just to understand how this would apply. Let's say there's a threat that the auditor is not independent because they've done a review, sorry, let's say not an auditor, a review, or they've done a review, but they've also compiled the financial statements. Well, how is that threat evaluated? Well, we're saying the code says that you can't, there's a self-review threat. There's a legislative perspective. If you look at the professional judgment, what does the law say? The law says that a person who prepares financial statements can't audit them. But it doesn't say from the Companies Act perspective that a person that prepares financial statements can't review them. So then how do we deal with that from the code? We say, well, how do we address that threat? Well, what possibilities, what responses are there? Well, either you can resign from the client. Well, we don't want to do that, then we lose the fees. But what other ways are there of addressing the threat? Are there any safeguards? And we'll discuss what possible safeguards could be in due course. I hope that's clear. So let's then understand how we then apply professional skepticism in making these judgments. So we need to then understand the facts and circumstances, what's happened. Is this a jurisdictional issue? Is this a South African issue? Is this an international issue? Where is this at an entity? Is this an individual? Who's being involved? Who's doing it? What are the potential challenges? When did this take place? Why are they looking to carry out a specific activity? And then how are they looking to do it? And what are our options in addressing it? In terms of the stages of professional, the conceptual framework, we need to identify, so that's obtaining information, understanding that threat. We then need to make sure that we identify not only the circumstances, but also the threats of compliance. We evaluate the threats identified, including the requirements, to look at reevaluation of the facts and circumstances, reevaluation of an understanding of that information. Are there any new threats? Apologies for that. And then also making sure that once you've got a thorough understanding, to look at, are there any new, look at addressing the threats, evaluating one's responses, seeing if there's safeguards, understanding different courses of action, and then including a step-back approach to see, well, have I been objective? Have I been independent enough or not? So the overarching requirement is apply your knowledge, make sure you're up to date, remain alert for new information and any change, and then use the RIP, not rest in peace, but reasonably informed third-party test. So when it comes to professional judgment, we've spoken about CPD, we've spoken about keeping up to date. Well, that's what Denny and Stan do. They try and make sure that you're up to date. And it's important, if you have any additional topics, to communicate that. If you're aware of things that are changing that haven't been offered. I mean, I sit and I look, you know, with Denny and hi. Sorry, apologies. I think I just lost you for a while. I think I'm back. Can I just have, from a show of hands, can everybody see my screen?
The screen seems to have gone off now. I don't see your sharing screen anymore.
Okay, I'm going to just, thank you. Can you see that now?
Perfect, back on.
Okay, apologies. I don't know what happened there. I seem to have just lost signal for a couple of minutes. Danny, do you know where I went down?
I'd have to review it. I'm not too sure. It was only a minute or two ago.
Okay, so let me just start from this slide, if that's okay with everybody. If we can just have from a show of hands, if I repeat from the beginning of the slide, is that okay, or do we need to go back further? So repeat from this slide, just from a show of hands, would that be okay? Okay, great. Thank you. Okay, so just in terms of the professional judgment, so what we're saying is when it comes from relevant training, we've spoken about CPD, and that's what Danny also assists you with. And very importantly, that we need to make sure that we have a sufficient understanding of changes in the legislation, the professional standards in which we practice, the tax laws, etc. When it comes to skill and experience, we need to make sure that we have adequate consideration of if one's going to do a specific type of industry, it doesn't help that one's got general knowledge of valuation laws, valuation principles, methods. If you're doing a minority valuation, that's different to a majority valuation, and how do you address those differences? The same with if you're used to doing individual taxes, that's quite different to doing corporate taxes versus different to do entities that have specific allowances, be that manufacturing or Section 24C allowances. That's what Danny utilizes tax professionals for. And you need to make sure that if there are any skills and experience that you lack, you need to make sure that you get that. From my perspective, I look at the area in which I operate and try and recommend courses to Danny. And we sit and with Stan and decide which courses would be appropriate. But, maybe there's something that you feel we may have missed. And you need to make sure that you have that knowledge. And if we're able to assist you and can train you on that, please communicate with Danny in that regard. Professional judgment means looking at the knowledge, skills, and making sure that it's aligns with the facts and circumstances, including the type of work that one's going to be carrying out, and particularly in line of the relationships and interests that one may have. When it comes to professional judgment, so the requirement is that one needs to make sure that one gets an understanding of those facts. And, you know, I'm emphasizing the importance of the understanding and a sufficient detailed understanding of the facts and the circumstances to then identify and apply professional judgment. And that's what this funnel or cylinder is for, almost like a strainer, to say, well, based on those facts and circumstances, applying your professional judgment, what could fall through and lead you to be in breach of the independence requirements. So factors to consider include the reason to be concerned about potentially missing information. We were speaking about that a bit earlier, so I'm not going to labor the point. The same with inconsistencies. Do you have the necessary expertise and experience to question it? Do you have resources where you can consult on specialist areas? Because this is something new to you, or, you know, this is something where you feel you're comfortable, but you may need to just have a network or bouncing board. Is this a reasonable basis on which to reach a conclusion? In other words, are we applying too much emphasis on a particular matter without considering other possibilities? And then looking at other reasonable conclusions, other alternatives, because, well, if the conclusion is based on the information we have, but we don't have all the information that we should, well, there's a risk that we're not going to be applying the right response. Or if we have a preconceived idea on how one should be, what information is needed, without objectively looking at what information should be available, well, then our independence could also be impaired. When it comes to looking at independence, and I'm going to finish with the next two slides, and then we'll break for a 15-minute tea break. So just if I can have your attention for another 3 minutes or so. One significant impairment to one's independence is where a professional accountant takes on management responsibility. And that is where one is overstepping the mark, for want of a better word, of consulting and taking on the decisions which management should actually be making. And that could be areas in which one looks at the acquisition or deployment and control of human capital, human resources, financial, technological, physical, or intangible. In all of these areas, there's a risk that one's independence could be significantly impaired. For example, the code says an auditor is not allowed to be involved in the interview of the human resources, so financial position as a financial manager, because, well, that's going to affect your independence, because now you've said this person's okay, and are they really? One example. So examples where there could be an impairment of your independence is setting policies and strategic direction, be that accounting policies, be that strategic direction, targets, etc. Well, where one sets that up, well, then one's independence, because you can't challenge that objectively anymore. I've spoken about the hiring or firing of employees. Hiring, I've spoken about, firing is the same. Where one is directing and taking responsibility for the action of employees, well, you know, there's no ways that anybody should be reporting to the professional accountant. They should be reporting to management, and management should be making those decisions, and that should be going to the chartered accountant. If you're involved in authorizing transactions, be that from a payment perspective, I remember I was asked to act for a particular client. They had no staff in South Africa. They had a relationship with the auditing firm, the internet, which I worked for through a network, and they said, well, can you put us in touch with someone? It was my responsibility to act as a second signatory. I was not then entitled to exercise any review or anything on this because my independence was impaired. I've approved this based on the documentation I was given. Controlling or managing financial resources. I was in charge of the bank account, you know, that's just an extension of that authorizing of transactions. You know, if someone is responsible for implementing improved controls, well, that would then lead to an impairment of their independence in evaluating that. If one takes a step and acts as a go-between between management and those that are management and those charged with governance, the staff and the ultimate those charged with governance, that is clearly an breach of your independence. And the same applies with the preparation and fair presentation of financial statements. If you're preparing and you're presenting in an audit, that's a problem. In a review, we hinted to this before, just to answer that, well, there you could introduce a safeguard, and that is that the person that's involved in the preparation has nothing to do with the review. And then around the design, implementation, monitoring, and maintenance of internal controls, I touched on that briefly before. So if we can just please synchronize our watches, and then if I can ask everybody to be back in 15 minutes from now. Thank you. I'm trying to get hold of Taryn, please. I don't know if she's able to help me. I was speaking to her and then I had to go into a training session and I'm just on a short break now. Okay, hi everybody. We'll be starting in about a minute, so if you can get ready, please. Okay, welcome back, everyone. Just another comment that's been raised in the Q&A is that recent student demonstrations has raised an interesting ethical consideration. One of the students' demand is for unpaid fees to be partially or wholly forgiven. The unpaid fees would include students who cannot afford to pay their debt, but also students who could afford to, but haven't done so. The paid fees would include those students who could afford the payments, but also those students who have made payments but at considerable sacrifice. You know, I think this is an interesting discussion, and I'd love to go into it further. But I think this is more of a moral issue than an ethical issue. In terms of the context of what we're discussing, and therefore I do believe it's sort of outside of the scope of what we're addressing. And in order to finish on time, you know, I'm happy to debate this with you at another time, or maybe on one of our other, when we're face to face, and we can pick this up at another time. But therefore, you know, if we can just agree to sort of park that one for another time. Thanks then. Right, then in terms of then the reasonable and informed third party test. So, you know, the interesting thing is, why is that so critical in the evaluation of independence? Is because it gives that one ability to step back to determine, well, what's actually going on? Is there something that one is missing? Is there something that one has overlooked? What do other people consider, and what would they think under the circumstances, and how would they view my behavior? So when it comes to the reasonable and informed third party test, so we need to then make sure that one is able to give sufficient understanding of how one's applied one's professional skepticism to ensure that there is adequate consideration for all the facts and circumstances, that there is due consideration for that application of professional skepticism as to known information as well as information that should have been known. And therefore, what's the responsibility of a practitioner is then to make sure that when it comes to a situation of matters which one would expect it to know. I mean, an example that comes to mind is, you know, let's say you're doing evaluation. Well, you'd be expected to know the different types of evaluation tools. so that you can evaluate whether whether or not the method applied, so not the tools, the methods, I should say, whether or not the method applied by the client is appropriate. You know, the same with various different scenarios. If there are alternatives, you should be aware of them if you're giving professional advice in that area. Obviously, it's important that the timing of this is critical. You know, we apply the Code of Ethics and the independence requirements, and the RBA have to keep a record of the different effective dates of all the different changes to the code, because, you know, you need to apply the code that's applicable at the time at which you were making that decision, and therefore that's the level of independence that you would need to comply with. And obviously, from a objective and professional competence perspective, the reasonable and informed third party test looks at, well, based on that information that you've got, have you demonstrated that you have the knowledge and the experience to apply it under the circumstances? And finally, has that been objectively applied? Or was there a preconceived agenda, outcome that one was looking at? You know, it's interesting for those of you in the auditing space, you know, the regulator has said that when they've inspected files, you know, one of the aspects that they see, and we can look at this across a more broad category, you know, quality control manual, as we said, applies to all professional accountants. So, which means that when you take on a client, you should have a quality control manual, and part of those requirements is to consider what have you evaluated in arriving at a decision whether or not you should take on the client or not. Now, one can look at this with a preconceived mindset to say, well, I'm taking on this client, let me tick the boxes. Or one can say, well, hang on, this is a client with a dodgy past, they've changed auditors, or they've changed tax consultants, or compilers of financial statements 4 times in the past 5 years. That should be raising some alarm bells. I'm not sure this is somebody I want to accept as my tax client. So when it comes to the applying the third-party test, so one looks at the conceptual framework, consideration of the conclusion. In other words, what has one considered in an independence to determine that one is appropriately dealing with the circumstances or matters. And then also from the perspective of the addressing the threats, well, is the threat reduced to an acceptable level, but not from my standpoint, from the standpoint of somebody looking at the circumstances independently to say, well, I'm not sure if you've done the audit, you've prepared the accounts that at the same firm, that having a separate person to prepare the accounts is adequate. And the code says that. There's no safeguard if the firm or even the network has been involved in the preparation of the financial statements. So that's a very critical step. And then the independence, well, is it not just independence in mind, but would somebody looking in, if this became headlines in the newspaper tomorrow, what would they say about your action, about my action? Would that hold up to the perception of the press? And obviously it's got to be a knowledgeable, informed party. I understand sometimes the press get things totally wrong. You know, one needs to deal with that Hopefully it doesn't happen too often, but we're dealing with reasonably informed third parties, as it says. So when it comes to then addressing the threats, so we need to make sure that we take prompt action. I was discussing with a client last week, and he found that he was in a situation where he was in breach of the code, in that there were certain audits which he hadn't considered to be statutory audits, and the person was in breach of the code in that, from the Companies Act perspective, they should have rotated 5 years after starting the audit. And as soon as the person has been aware of that, the person said, well, sure, I'm glad I've had this discussion now, because I need to evaluate who's going to sign this off, because obviously I'm not able to anymore. Another person could have said, oh, well, I've done the audit, let me just do this for the last time. That's not prompt action. The person saying, well, I'm in this situation now, I know this is now wrong, if something was niggling me in the past, I thought this would have been okay, now I realize I can't sign it off. Well, what action can I take? So that's and what are the actions? There's different types of actions, and there are 3, and they are generally mutually exclusive. You normally do one, not all. Sometimes you can eliminate the circumstance. In other words, you've got a staff member, a bookkeeper, or somebody who has a familiarity threat with a client. So what do? You make sure that they aren't involved on that client. There's an elimination. You can now proceed with the engagement, but no longer worry about the threat anymore. Sometimes the threat is that you can't eliminate it. You want to do a review, but the code says you can't do a review if you prepare the financials. Therefore, what do? Well, you then decide, well, actually what I'm going to do is I'm going to use my fellow partner or have a relationship with another chartered accountant, and when I do the preparation, they'll do the review and vice versa, or I'll choose what I want to do. You know, for my clients, maybe the preparation and the consulting is more lucrative, and I'll do that work, and then I'll give the review to them, and they can do the same to me on their clients. Obviously, each practitioner needs to carry out and perform the procedures so that they're comfortable signing off. Another example of applying the safeguard is, you know, in a rotation environment, is if you are fortunate enough to be in a 2-3 man practice and you're both doing audit, is to say, fine, let's, you know, after 5 years, I've got to rotate on these statutory audits. Thereafter, my colleague's going to take it on. That's applying a safeguard, a rotation. Sometimes there is no safeguard that can be applied to address a threat. And that would be, for example, where I had a situation where I was approached to do an external quality control review on a entity that's listed on the Altex alternative exchange, and was quite excited at the possibility of doing some work for this client, a new referral, only to find out that I have a close relationship with somebody who had a Section 12J investment, and I advised them and looked into the possibilities, and it was with this entity, and I felt that my independence was impaired, and therefore had to decline the engagement. The more common situation where one would have to do this is if an entity is a review, it then becomes an audit. Your firm was doing the preparation of financial statements, or it was I had a client that said they've been preparing and consulting to a company for the past 5 years, 2 partners involved, a PI score was below 100. The entity signed a huge contract, increased staff, PI score now 350, compulsory audit. Well, there's no ways that they can continue to do the audit because they've been involved in the past 5 years of preparing the financial statements. So that's an area in which one's independence would be impaired, and one would have to then decline or end the relationship. Don't know if there's any questions on that before we move forward. Okay, can't see anything popping up. You know, I think part of the revisions in the code for the safeguards is, and particularly in the area of independence, is that people thought that safeguards could be implemented for everything. So in other words, I've got an independence problem. Well, I'm going to get somebody else to look at my work. Independence threat eliminated to an acceptable level. But what we've realized is that no, sometimes from a code's perspective and an evaluation of an appearance, this is from people objectively looking in on our profession, the risk cannot be mitigated to an acceptable level, and therefore no safeguard can be implemented, and therefore it's inappropriate. But where it's warranted and justified, well, then one can implement an appropriate safeguard. In terms of a safeguard, so what is a safeguard? So safeguard is something that will reduce a threat to a fundamental principle to an acceptable level. The next question is, well, what is an acceptable level? That is that the risk that has been identified is reduced to the extent that there is no longer a threat and a breach of that fundamental principle. And the appropriateness and effectiveness of those is to make sure that we evaluate that to determine whether or not we have then appropriately reduced that. And while sometimes we say, and I've had situations where, well, I believe introducing a third party to review my work where I'm preparing the financial statements is adequate, well, where it's a breach of a law, unfortunately, professional judgment can't override the law. I mean, I had a situation where, you know, the extent of work carried out because the person actually prepared some of the documentation and schedules that were to be audited was to such an extent that the independence was significantly impaired, and there was therefore no way in which one could have reduced that to an acceptable level based on the requirements in the code. In terms of significant judgments, so where one has had to apply one's mind in carrying out significant judgments, so then one needs to make sure that there is adequate guidance and documentation around what are the factors that one applied, what is it that one considered. Sorry, I'm just going to try and change something here. Give me one moment. Right, sorry, that's just a bit better now. I can look at the screen and speak to you. So, sorry, I was just saying, sorry, I've just gone back a few slides for some reason. Give me a moment. So when it comes to significant judgments, so, you know, that's an area which applies the application of professional judgment, evidence that one's been applied professional skepticism to demonstrate that one's independence hasn't been overridden. And on that basis, there is significant requirements and guidance that's given that with consideration to the area in which one is forming a conclusion, one needs to make sure that one documents one's requirements as to how the judgment has been made, the conclusion reached, so that there's also evidence of the facts and circumstances and other possibilities that have been taken into consideration, together with how the reasonable and informed third party test was also applied. I hope that makes sense. So finally, when it comes to documentation, you know, this is an area in which no matter what one thinks, this will never happen within generally a day, a week, a month, sometimes even a year. The challenge that one experiences is that sometimes many years later, your decision is questioned. There's a complaint, there's a disgruntled client, a split up in a family, you know, these sort of circumstances, and then all of a sudden, now your professional conduct is being questioned. And therefore, when it comes to these ethical decisions, well, how then do you apply? How do you demonstrate what you considered? And that's why the documentation, when you're making it, gives you an opportunity to evaluate it. And very interestingly, somebody I used to be in partnership with many years ago, who's gone on their own, contacted me 2 days ago. They were doing a mediation, and there was something that just didn't sit right, a mediation for a divorce, and were involved in the valuation of the assets. Sorry, I should say they were actually assisting the mediator to compile a list of assets and values between the two parties looking to separate from each other. And, you know, the question was, well, certain arguments are drawn, and, you know, are these arguments correct? If payments take place at certain dates, do they affect the values, particularly in loan accounts, etc.? And, you know, it's critical that one then documents the entire process, that identification of the threat, the facts and circumstances, what one's considered, are there any safeguards, how is one looking to address it, and what's one's overall conclusion, and then taking that step back approach to say, well, this is what I've decided. If I look at this from a third party, what other factors need to be considered, and has that been properly evaluated? Right, so then, in terms of other factors that could lead to an impairment of independence, the good old inducements. I'm not going to go through all of these. When I gave an update of the code, this was one of the significant changes, but an inducement is something that is there as a means to influence behavior, even though it's not necessarily with the intent of improper influence. And if we take one of those media examples, where scandals where certain parties were invited to the wedding without having had any knowledge or relationship with the Guptas. You know, these are the sort of questions to say, well, isn't this subtly trying to compromise the objectivity and impair the practitioner's independence? And I think we're seeing that the media has taken very strongly against it. You know, the good old question of the audit lunch that used to be a common thing in the past, for those of you auditors in the room, you know, is that hospitality? Is that something which could impair independence? You know, who's always doing it? Is it rotated? Is it a mutual thing? I don't want to get into the details of whether or not that's right or wrong. We all have different views on that, but I think we need to be sensitive that these are the things that we need to be alert to. I'm not going to go through all of these, but I think it's just the principle that inducements can and potentially could impact a independence. In terms of then the matters that we need to address on inducements, we just need to separate them between those which are prohibited by law versus those which we just know are not correct. You know, a practitioners is required to ensure that they consider the reasonable and informed third party test to conclude whether or not there is intent to improperly influence behavior. And the local requirements in South Africa, in addition to the code, is that one shall not accept or encourage others to accept any inducement which one has reason to believe that a third party may view it as an improper influence of behavior of the recipient. So, you know, I think we need to then just make sure that we consider these factors. What I'd like to do now in the last 10 minutes is time for you to apply your mind. I've got a quiz that I'm going to be sharing. I'm just going to share it in the chat because then everybody will be able to see. Just give me a moment. The balance of the slides are areas for audit, and based on the audience here, it's something that affects the public interest entities. So it's there for your information. It has been covered by me in the past. I thought I'd just refresh it here for you. But in terms of the requirements for what we're looking at, I don't believe it would be necessary. I'm just going to post in the chat if I can get there. Give me one moment. So if I can ask you all to go to the chat. And I'm going to just post there a quick link for everybody. And if you can click on that link, and it'll open up a web browser, which will then give you opportunity to vote, to read 3 questions and to vote on them. It's something that'll look like this. When you click on it, it's just a quick ethics quiz. Just want to understand your thoughts on the following 3 scenarios. But instead of looking at it on the screen, if I can ask you to just click on the chat, click on that link. Can I just have from a show of hands, who's been able to click on that? Just from a show of hands, are you able to click on that link? Great. I can see some hands going up. So just go to the chat, click on the link, and then it's totally anonymous. So I have no idea who's voting on what, but if you are able to do that, that would be great. And then you can vote. So the first one is a scenario whereby we've got a CA. SA is employed by an accounting branch of a law firm. This branch does monthly returns for the clients, and the CASA is also required to sign off compilation reports on the financial statements of these entities. He signs off as Mr. XYZ, CASA, law firm date. He's not a shareholder or director. Is he allowed to do this? What are your thoughts? If you can do me a favor, just vote quickly online. If you go to the chat, click on the link, and then you should be able to see that over there. Okay, is anybody voting? Everybody familiar? Okay, don't seem to be getting any responses online. I'm not sure why. So maybe let's do it then. You seem to be more responsive to on the show.
I can see people are saying they can't see the link. There is no link. Let me try. I'm going to try to send it again.
In the chat, one person said they could.
I've sent it again. Can people see it from? You sent it just to me and to Stan. I've sent it now to all the no.
No, I sent it to everyone. I said to all delegates, unless it only went to the presenters, but thank you. Okay, let's see now.
Can people see it now?
Yes, great. Okay, thank you. Hands going up.
Okay. I think people need to answer all the questions before they can submit. So do you want to read through all of the questions and then people will submit?
I think, yeah. Okay, and well, they've got the questions on there online as well, but we can go through that. An audit firm uses the services of an independent sole practitioner for compilation of financial statements for statutory audits it performs. May the sole practitioner accept/enter into contract work with the audit firm as part of an engagement team on another audit or review engagement? And then the final one, bit of a long question, but in summary, a person used to work with an entity for 18 months on a contract basis. They then form their own company, and now can they enter into this arrangement to carry out certain work? So please have a look at those, and then we'll discuss them based on the responses. Thank you. Don't worry, I have taken it off. I'm just monitoring the responses. Okay, I'm going to give you about another minute or two just to see. Okay. So if we can ask you guys to finish off. Okay, I'll give you another 30 seconds. Okay, last countdown, 10. Great. So let's have a look at the results, and thanks everybody for submitting your responses. So I'm just going to drag this. Can everybody see that or not? And just, Danny, if you can just confirm, is the results visible now?
Yes, they are.
Thank you. Okay, so interesting. On the first question, majority of people saying that this is definitely allowed. Some people saying almost half saying not allowed. So let's just understand what's in play here. And apologies, we're probably going to just go over about 5 minutes maximum. So a CA is involved in the branch of a law firm. The law firm does a monthly return. They submit the law, the PAYE, UIF, those sort of returns on behalf of the client. The CA signs off a compilation. So a compilation is the preparation of financial statements. They're not doing an audit, they're not doing a review, and therefore somebody else is doing the monthly returns. I would imagine that person has oversight and needs to review that and see that they can apply their professional skepticism and then be satisfied that the information is not false or misleading, and therefore there's nothing preventing that person from preparing those accounts. They're not offering any auditor assurance, and therefore that would be allowed. So the majority of you getting that one right, well done. And An audit firm uses the services of an independent practitioner for the compilation of financial statements for its statutory audits. So in other words, all the audits above 350 or audits where there's a requirement for an audit to be carried out in terms of the MOI, and they outsource this information, the preparation of those financial statements, to John Smith. The question is, can John Smith enter into contract work with the audit as part of an engagement team on other audit or review engagements? In other words, that he's not involved in. So the question is, well, is that not an adequate safeguard? And provided it's not an arrangement whereby John Smith becomes almost like an extension part of the network of the audit firm, then it would be perfectly permissible. I don't see any additional safeguards that would be needed. They're separate entities. They're not involved in he's not doing the preparation of the financial statements. So he's not doing the audit where he's involved in the preparation, and therefore I believe that should be a yes, definitely. And the final one, interestingly, almost all of you that voted saying, no, that's a problem. So I agree, it's a problem if they are using confidential information. However, the Psycho Code of Professional Conduct does say, and just listen carefully, that yes, the principle of confidentiality continues after a relationship has been terminated. However, what information are they using? It goes on to say an ex-employee is however entitled to utilize experience gained, but cannot disclose or use confidential information. So what we're saying here is she's using the principles that she's gained. That's knowledge. You know, one can't leave one's brain behind. So if you've gained skills and techniques, you're allowed to use that. So if, however, she's then contacting clients and etc., that would be a problem. And she requests an analysis on subjects that she used to work there. Well, that's the knowledge, and this is the information that she's used to understand how to apply that knowledge. That would be allowed. But if, however, it's a circumstance whereby she's actually taking and introducing, new policies and procedures and designing them based on the IP of the old employer, that would be a problem. So this one depends. If she's doing the second part, clearly prohibited, and you guys are right. Some of these aspects where she's using the knowledge, the code says that would be allowed, because one can't leave one's brain behind. I hope that's been informative and interesting. I'll hand over back to Stan or Danny, and then I will stay online if there's still any questions. I hope you enjoyed the session, and enjoy your evening. Thanks very much.
Thank you, Edwin.
So, thank you, Edwin. That was most fascinating. It kind of says, how do you meet the impossible demands? I mean, none of these are achievable. So as the auditor, do you get 80%, 90%, or what's a fail? Because what I see here is you're relying on the honesty of everyone, and that just doesn't exist today. But thank you very much, illuminating stuff, most informative, and thank you everybody for joining us. If you have any questions, email them to us. Then we'll respond, and if we need to pass them on to Edwin, we'll do so. your certificates, as I said, if you paid, then we'll happily send it to you in the next day or two, and look forward to having on the next one, which is going to be talking about retirement, and we'll be sending out the notes within the next few days as well. So thank you again to all our Jewish attendees and customers and so on. We'd like to wish you kosher Pesach, and well over the Pesach period, and enjoy the matzah. And anybody can eat matzah. So if you're not Jewish and you would like to enjoy matzah, please do so. And thank you to everyone again. Thank you, Edwin, for most illuminating talk.
If anyone wants to ask any questions, they can put up their hand or message me. I can allow their microphone so they can ask questions if it's easier than typing. And also, while we're wishing everyone special days, so that if anyone's Irish, happy St. Patrick's Day.
Yes, absolutely. Should have had green backgrounds, not blue.
Well, no, technically St. Patrick's, his color was blue. Irish are green, but St. Patrick's is blue.
Anyway, I'll just raise a beer glass and in the traditional St. Patrick's fashion.
Okay, I'm going to allow them to talk. So there's two people with hands up.
Sure.
So I don't know if either one wants to talk, Hector or Robert.
I don't.
Maybe just an old hand.
Yeah, maybe because they've dropped it now. All right, I think I'll give it another minute now. Anyone else? Questions? No. I'm going to end it
just
then.
A question for Edwin. Have you given this talk to government or not yet?
I haven't been invited.
I don't think you should hold your breath. Okay, thank you very much. I'm going to leave, and good night, everybody. Thank you, Edwin. Thanks, Danny. Cheers.
Bye.
Thanks, everyone. Cheers. Have a good evening.